All right, happy Tuesday, fellow traders. I hope everybody enjoyed their Memorial Day weekend and everybody stayed safe. Today, the market is up a little bit, which means a lot because it opened up down. I think the S&P was down like 1.5% this morning, and now here we have it kind of flat on the day. Nasdaq's up 0.3%. So we're seeing somewhat of a continuation of this. We'll call it the bear market rally. I don't know if that was the bottom that we saw last week, but I am using this opportunity to kind of set up some more downside positions just to be safe and keep the portfolio as neutral as I can. So a couple of new trades. Today's the last day of the month. So tonight I'll record a post-mortem. I'll probably do it tomorrow, post it tomorrow, of how we did for the month of May. I think we did okay, all things considered, but we'll have all the details tomorrow. All right, so let's go over a couple of new trades we did today. All right, so here's Nike, NKE. I did a bull call vertical on this one. You can see it's actually working out pretty well. It's above my my level of profitability, which is 117.51, and we're trading at 118.63, so it's working out well over the past 4 trading days. What I did here is I sold the July 8th 120 calls for $4.04, and then I went ahead and I bought the July 8th 115 calls for $6.55. You can see we're up about 11% in the trade so far. Good start. It has come back with the market. Here's First Solar. I just went long the calls here. You can see this thing had a really strong couple of days. It's off a little bit today, but I went long the calls here. I need this thing to trade above 76.03 on or before expiration to take a profit. I saw this. This is what kind of drew me to the name. I saw this article come out today on Bloomberg. So the trading in the options of First Solar rose almost 10 times the 20-day average, and the most active contract was the June 3rd. Pretty high conviction, at least according to this, that some folks are thinking that this is going to go higher. So I said, you know what, the stock looks like it might have bottomed out, it might be trying to trend higher, so we took a shot. So with First Solar, I went ahead and I bought the June 10th 75 strike price calls for $1.03. We're off a little bit in the trade as of right now. We're off a lot, actually, about 20%. But that said, we're anticipating somewhat of an upward spike, at least according to the options activity. So we'll see. We'll give it a shot. So here's Paramount Global. Now, we made a lot of money. I think I traded Para, I don't know, 4, 5, 6 times in the past 2 months. And we made money to the downside. So here we are. I'm taking a look at this. It had a pretty decent run. There's a good gap up here on good volume. It seems to be moving higher. I actually went here. I took a downward bias on it. I think there's going to be a lot of overhead, especially up here in this gap. So I took a little bit of a downward bias in this one. So the bear put vertical that we did, we sold the July 15th $25 strike price puts for 18 cents, and then we went ahead and we bought the July 15th $30 strike price for 79 cents. Johnson & Johnson. So I put the bear put vertical on this. I saw this thing collapse this morning. It has since recovered pretty aggressively, but we'll see what happens. So I need this thing to trade below, on near or below, what is that, 174.05 before expiration. So for the bear put vertical for J&J, we sold the June 10th 170 strike price puts for 50 cents, and then we went ahead and we bought the June 10th 175 strike price for $1.45. So here's AEP. Now, we've made money with AEP to the upside in the past, if I recall correctly. So here I'm looking at this double top. You know, it's an electric utility. If we are going to see a little bit of a bear market rally here, I'm anticipating more the higher growth names to rally, your consumer discretionary, your tech, and I wouldn't expect your utility names really to rally that hard, and considering that this thing kind of hit its double top here, I'm anticipating this thing's going to come down a little bit, so I went long puts here. You can see I need this thing at 98.80 on or before expiration to make some money. Again, this thing sold off, but it came back. The whole market came back. So for AEP, I bought the June 17th $100 strike price puts for $1.20. trading at $1.03 right now, so I'm down in the trade. So here's AGL. We made money with this in the past to the downside. I'm taking a look at this. It had a really good run back in, let's call it May 15th, May 16th, and since it's just been hovering. It's 20 days below its 50-day. It's having a hard time breaking through the 50-day. I'm anticipating that this thing is going to roll over. We need it to close below that 1825 level on or before expiration. All right, guys, another tidbit from the unusual activity options screener that I use on Bloomberg here. You see here the trading in the options of this company, AGL. It's 7 times that of the 20-day average. So you can see the most active here are the puts, the June 17 puts and the July 15 2250 calls. So lots of activity. I went long puts on AGL, bought the June 17th $20 strike price for $1.75. We're down a little bit in the trade, but again, we made some money with this to the downside. All right, here's Boot Barn. So this company, I'm anticipating that this is going to continue this uptrend, at the very least, to kind of test these highs up here near the $9,500 level. So I went long calls here. With Boot, we bought the June 17th $80 strike price calls for $5.39. And you can see we're up a little bit in the trade, up about 10%, so it's going our way. You can also see here that trading options of Boot Barn rose more than 6 times the 20-day moving average. So there's a lot of activity here in the call. So the June 17th 80 calls trading very heavily. The June 17th 90 calls trading very heavily. June 17th 85 calls trading very heavily. So there's a lot out there that's kind of banking on an upside move here with the name. So I just jumped on that bandwagon. So this is EBIX. Am I saying that right? EBIX. All right. So I went long the puts here. I'm expecting that this thing has been in a downtrend. The 20 is below the 50. It seems to be coming up here, testing its support. Testing its resistance, and then going to come down and possibly even retest the lows of 27 or even 26. So I went long the puts here. I went ahead and I bought the July 15th puts, $25 strike price for $1.90. You're trading at $1.90, so I'm kind of flat in the trade. You can see here that trading of the options of EBIX rose more than 4 times the daily average. There's some folks out there kind of banking on some downward pressure on the name. So again, I took a shot with it. I like the way the chart looks. Here's Williams Company. It's just a stellar performer. This thing is just acting great. I'm anticipating that this thing is going to continue its uptrend. I don't love the idea, only because the MACD is kind of extended here. Probably come back and retest this moving average before shooting up again. I'd have left myself some room. This is like clearly in a solid uptrend given where the market has been, so we took a shot. So I went long calls. The June 17th calls, $39 strike price. Bought them for 25 cents. All right, FLR, I put a bull call vertical on this. This thing is having a really strong day today. It seems to be trending up. At the very least, I think it's going to retest the highs here at 31, so I went ahead and put this bull call vertical on it. So for FLR, I went ahead and I sold the June 24 calls, $31 strike price for 11 cents, and I went ahead and I bought the June 24 calls, $27 strike price for $1.70, looking to make that spread to the upside. We'll see how it turns out. All right, so the markets are coming near the highs of the day. We'll see how this turns out. Tomorrow, I'll do a post-mortem of how we turned out in May. Should be a good month. And till then, I will see you tomorrow.